Joachim, how do you see this inflation targeting strategy and this new, quote, average?
Yeah, well, first of all, thanks for having me today, Taylor. So, yeah, the new inflation regime, I mean, first of all, this will not be a revolution. This will be an evolution of what the Fed has already been doing for some time. I think the key buzzword is inflation tolerance. So they will, or put differently, I think they will adopt an opportunistic reflation strategy. So this will not be a formal price level targeting or a formal average inflation targeting. This will be more of a loose opportunistic reflation regime where they will signal in various ways that they are willing to overshoot the inflation target in order to make up for past undershoots. So again, it's inflation tolerance. And as you already indicated in the quote from me, I think the more interesting part will be that implicitly this means that inflation tolerance requires deficit tolerance, because the Fed is at the zero bound for interest rates. They don't want to go negative on rates. So they will need help from fiscal policy. So they also have to be more tolerant of more expansionary fiscal policy and not do what they did in 2018, 2019, when we had fiscal expansion and the Fed tried to offset that by raising interest rates. The new regime is one where you have a partnership, a monetary fiscal partnership between two consenting adults, right, that agree to a mutually beneficial relationship where they, with combined action, fiscal and monetary, where they lift the economy back closer to the long-term trend and where they lift inflation higher. Both the government and the Fed at this stage want higher inflation, as long as it's good inflation, which means not only consumer prices increasing, but also wages increasing and ideally more than inflation, so that real wages, that purchasing power goes up.